Hello, everyone, and welcome to another edition of the Smart Investor Market Update. Markets are down this morning. We have the S&P 500 down 9 points. The Nasdaq is down 30, and the Dow is down 32 points. We're going to take a more detailed look at what's happening in the markets. But first, let me just speak about the importance of looking at charts, because a chart of a particular stock or market can tell you a lot. For example, this is a chart of the Dow Jones Industrial Average, and we can clearly see here that the market is in a beautiful uptrend. And one of the first things I like to tell folks before they buy into a market is to ensure that the market is seeing higher highs and higher lows. Make sure the chart is in a positive uptrend, because when you have an uptrending situation, then what you will find is that the path of least resistance is normally up, and it will lift most stocks when the market is in an uptrend. Now the problem is, when will this trend end? And we are at a situation with the Dow that we are some 9 years into this bull market. I mean, we bottomed out here in 2009 around the 6,500 region, and we're currently at 20,816. So we have seen a fairly strong move to the upside, but I am encouraging investors that they have to be wary at this point in time. What I can say is that the majority of the gains are behind us in this market. So yes, the market may go up a little bit more, but we have to be very cautious. Now, we're currently in the Dow, we're currently at an area of support. If you find the market closing below the 20,700 region, then that could signal to us that we are in for a larger pullback in the Dow. The level on the S&P 500 is, just bring up a chart of the S&P 500. S&P 500, if we close below this 2350 level and stay below it for the day, if the close means we just don't go down below it for the day. The close means if the day closes, the market closes, and we're below 2350, that could trigger a short-term sell-off in the markets. And as we know, short-term sell-off can become long-term sell-offs, but we'll evaluate the health of the sell-off if we stay below 2350. If we find support at 2350 here and the market continues to find support, we could see another attack at this 2400 level in the S&P 500. Taking a look at the overseas markets, the German DAX has been following the S&P 500 up nicely, and we're still in a uptrending environment. Now, the thing with the German DAX is that today we're down slightly at 6 points, or some 0.06 percentage point, and it looks like the German DAX at this point in time is taking its marching orders from the S&P 500. So the S&P 500 seems to be leading the way at this point in time. Looking at the crude oil market, we see where oil has been down over the last couple of days and is currently down again today. And what I'm expecting for oil is that we may see some support in the market around the $46 to $42 a region. If we close below the $42 barrel region, that would be bearish for oil, and we could see a larger sell-off. So this is the point on the chart. Close below that point, we could see a larger pullback in crude oil. And because crude oil is down, it's bringing down most of the energy sector. Uh, Notably, heating oil is also down on the day, and natural gas is also down on the day. With the with the with the increment weather that the east coast of the US is experiencing now, some folks have asked me if this is a good time to be in heating oil. But again, what I like to say is that let's look on the charts. Let's see what the charts are saying. And for now, heating oil market, I'm not seeing where investors are responding positively, and the market is still in a slight down move. So I wouldn't get involved with that until I see players come in and turn around the market. Taking a look at the US dollar index, US dollar index continues to, let me just clean up the chart here. US dollar index continues to flirt around this 102 region. And as I said yesterday, we could be seeing a head and shoulders top in the dollar index. That will be negated naturally if we close above this 102 region. A close above this 102 region will bring this 104 region back in focus with the US dollar index. If we close below the 99 region, that could signal that this US dollar has topped out, and we could be in for a multi-year decline in the value of the dollar. We just have to wait and see at this point in time, and that's why it's important to pay attention to what the charts are telling us and what the charts are saying. Looking at the gold market, gold remains in no man's land. The market is virtually unchanged on the day, and yes, we have had a pullback over the last couple of months, but we also had an increase late in 2015, early 2016. So we're seeing a situation where we technical analysts like to call a triangular consolidation, and gold tends to go in these triangular consolidations quite a lot. If we go down to the weekly chart of gold, this is how it looks at this point in time. So this is not a market that we want to get involved in just yet, because we want to see the trend reassert itself in either direction, whether up or down, and we're just not seeing any direction at this point in time. Again, when we focus on charts, we're not being biased. We're just looking at what the market is telling us and then putting money in areas where the markets are moving to the upside. That being said, I'm hosting a live webinar this Thursday. We have gotten a lot of excitement about the webinar, and what we're going to do is speak about the state of the markets for the next 12 to 24 months. I'll give a comprehensive look on the webinar. We'll also speak about how to make portfolio gains in any economic environment, because there's a myth out there that you only can make money in these markets when stocks are going up, and that is very far from the truth, because over the next couple of years we may be faced with a situation where stocks struggle, and in that market environment we need a strategy to bring us forward and to continue to make our portfolios increase. So the webinar is this Thursday at 8 p.m. Eastern. So Thursday at 8 p.m. Eastern. If you'd like to go on the webinar, click on the link below and sign up for the webinar. It will definitely be a learning experience, and you will come away with a whole new look on the markets, how to invest in the markets in good times as well as in bad times. So I will see you on the webinar. Click on the link below this video to sign up for the webinar. Thank you very much for listening, and I hope you have a wonderful day.